Okay, so we'll start with some basic accounting terms. And I'm just going to go through these and sort of try and explain what they are. So the first term is assets, which you'll probably have seen if you're, particularly if you're a limited company, you'll have this when you're doing a balance sheet, which we will go into more detail
Sorry, can
later.
I just check? Can everyone see that on the screen it says basic accounting terms? Is that up on the screen for everyone? Yeah, nodding. Perfect. We're on the right slide.
Yeah, that's all right then. So assets are basically any resources owned by the business. That could be cash, could be money in the bank, equipment, vehicles. So anything that is of value to the business, that's your assets. Then you've got your liabilities, and these are the obligations or debts owed by the business. So they might be loans, overdrafts, or outstanding supplier invoices that you haven't paid yet. Then you've got your equity, and this is one that often people are like, I really don't know what that means, but it's really straightforward because it is literally the owner's interest in the business, and it's really easily to be calculated, and I'll share the actual formula a bit later, but it's basically assets, so what you have of value minus your liabilities, the things that you owe, equals your equity. It's as simple as that. Now, usually you'd be thinking of equity for a limited company, but it's actually the same formula for a sole trader as well, because it's saying what you have, what you owe, that's the equity in the business, regardless of its structure. Then you've got revenue, and this is usually referred to as revenue or sales. I tend to use sales because in my training, when we talked about accounts, we always use sales, but revenue is a common term as well. But the revenue is basically the income earned from business activities or your sales. So you sell your cleaning service, you bring in revenue for the business. Then you've got your expenses, and we will go into more detail about these later in the presentation, but these are the costs incurred in the process of earning the revenue. So that might be rent, wages, cleaning materials, etc. So then you might have come across a couple of others. So there's accruals versus cash accounting, and then I'm going to talk about profit margins. So if you go to the next slide, we're going to talk about accruals versus cash accounting, because this is something that often people don't understand. So this is just two different ways to record your business transactions. You've got accrual accounting or cash accounting. And accrual accounting records income and expenses when they are earned or incurred, even if the money hasn't changed hands yet. So, for example, you record a sale when you deliver the service and send the invoice, not when you get paid. And this method, it does give a more accurate picture of your finances, but it can be a bit more complicated. And then you've got cash accounting, and this records your income and expenses only when the money is received or paid. So, for example, you would record a sale when you get paid for it rather than when you invoice. And this method is much simpler. It gives a clear view of your cash flow, but it might not show your business's true financial health because the cash flow might vary. Now, each method has... Yes.
I was going to say, this is really interesting, particularly when you get to that registration point, because suddenly which one of these you use matters, doesn't it?
Yeah. And, and each one has advantages, disadvantages. And certainly for VAT, the cash accounting method is far easier because you're not paying VAT on money you haven't received yet. Now, technically speaking, if you do your research, you're not actually supposed to use cash accounting if your business turns over more than 300,000. And actually, a limited company isn't technically supposed to use cash accounting, but I know that VAT offers you the option, so it's kind of a little bit confusing. And I think most small businesses just use the money in, money out, the cash accounting method, because it's much easier from a daily accounts way. It's much easier from the, doing your final accounts, especially if you've got to do a balance sheet. It's much easier to just, know that you're only accounting for the money that's come in, if that makes sense, or gone out. And as I say, cash accounting, I think, is the most straightforward and probably the one that you're most likely to use. And I find it quite strange that technically you're not meant to use cash accounting for a bigger business. However, you can use it when you're VAT registered. So it's a bit strange. Now, profit is why we're all in business. It should be the most important number in your accounts, really, but sometimes there's a bit of confusion between gross profit and net profit. And then people talk about profit margins, and then they're like, well, I don't necessarily know what a profit margin is, but if I did, what's a good margin? How much profit should I be making? So I'm going to try and sort of explain what the difference is between gross and net, how to calculate the margins, and then also a little bit of insight into what is potentially a good margin in our industry. industry. So if you go to the next slide, I'm going to explain gross profit. So gross profit is the profit you make after delivering the service, but before your general business expenses. And if you've got a team, your biggest cost will be wages and perhaps contractors. So sales minus those direct costs will be your gross profit. But if you're a solo cleaner, you'll probably be at 100% gross profit, as there won't be wages to take off, because obviously you don't pay any out as a solo cleaner, and because there's no payroll as such. Gross profit is sales minus the direct costs of delivering those sales, if you like. And then your net profit, and that's where it's at, isn't it, for all businesses? Gross profit gives you one indicator, but net profit gives you the indicator of what you're actually making overall. And net profit is calculated by taking your gross profit and then taking off all your other expenses. And that will give you your net profit. So the net profit really is the most important profit number, but gross profit can give you an indication of perhaps you're not charging enough to cover the wages, for example. But net profit for me is the most important profit number in your business, because it tells you what you're making. Now, you'll also find people talking about profit margins, and kind of like, it's usually a percentage, and it's kind of like, what does that mean? How do I calculate it? So if you want to know your gross profit margin percentage, you divide your gross profit, it's your gross profit divided by your sales and then times by 100, which turns it into a percentage. So in the example there, if you sell £10,000 worth of cleaning and you make a gross profit of £4,500, so perhaps it costs you £5,500 for the wages, then that means you've got a gross profit margin of 45%, because 4,500 divided by 10,000 times 100 gives you 45%. Okay,
that would be good. I'd like that.
That would be pretty good. Yeah. I mean, this is gross profit, but it's an important number, because actually in this example, every pound that you make in revenue or sales, you make 45 pence gross profit as your direct cost, or 55 pence in every pound. And yeah, actually a lot of businesses won't be at 45% gross profit margin. Okay, if we go to the next slide and we then look at net profit, that's worked out in exactly the same way. So net profit divided by the sales, then multiplied by 100 gives you the percentage. And in this example, £10,000 worth of sales gives you £2,500 of net profit. So that's a 25% net profit margin. And that means for every pound the business sales, only 25 pence of it is actual profit. What do you think of the 25% profit margin, Louise?
I'd take that. I'd be all right at 25%. I think you're going to talk through how that compares, but that's not bad.
Yeah, and it's an interesting question, because we do get asked it a lot, and it's really hard because there's not a lot of stats about the industry. And actually most businesses, and when I was doing my accounts training, it was a 30% profit margin was a good business. Anything less than that, and it wasn't necessarily a good business. But in our industry, I would say 30% profit margin is pretty good. So it's very difficult to know what is a good margin. And also, if your profit margin is lower, of course, but your turnover is really high, then actually it would all become more relative, if that makes sense. So if you're a solo cleaner, though, and it's like I said, a solo cleaner would probably have 100% gross profit margin, but actually a solo cleaner should probably be aiming for 80% net profit margin. I mean, I would love to have 80% net profit margin in my business, but I have a team, so I'm never going to achieve that. But a solo cleaner, if you're charging £20 an hour and taking off your expenses, then that could be £16 an hour if you're making a 20%, an 80% profit margin. But it might be lower, and actually it might be that £20 an hour isn't high enough now with the cost of everything else, especially if you're providing cleaning products and materials. But I would say that 80% is a good solid net profit margin for a solo cleaner. If you're making more, fantastic. But I would say you want to be aiming for a minimum of that, because if you realize you're actually only taking home £16 an hour, then it's still not a massive income, is it, on £20 an hour? If you've got a team, well, that's a whole different ball game. Like I said, you're not going to make 80% profit margin with a team. And if your gross profit margin is sort of 40 to 50%, potentially even less than that, then, you're going to have struggle to make that profit margin. But if you were at, say, 30%, which would be a really good profit margin, and you were charging £25 an hour, you'd be making £7.50 an hour net profit. The reality is 20% might be more realistic, especially if you're in growth mode or building a team to help you run the business as well as deliver the service. So then you're looking at £5 an hour profit on £25 an hour charge. And obviously, by the time you get to that sort of, rate, you're usually looking at VAT. So you're probably charging 30, taking in 25, and you're making £5 an hour profit. And, again, I mean, Louise, what do you think of that? 20%? Is that reasonable?
Yeah, and I think there's a lot of businesses out there that are making 20%. We always aim to be 30%, but in order to be making a 30% net profit margin, and this is something we talk about at great length, if I'm to make a 30% net profit margin, I'm charging a minimum of £33 an hour, which means I'm charging £27.50, and that is what it's actually costing me in order to make a 30% profit margin. And when we break it down like this, people start to realize, my goodness, you do have to charge a bit more in our industry because we're not making mega profit margins.
And also, I think if you think of these numbers, you would need 3 or 4 staff to earn the same as the solo cleaner. And if we assume the solo cleaner is charging 20 and getting an 80% profit margin, so earning £16 an hour, you need 3 or 4 staff to give you that £16 an hour. So, you do need to bear in mind these margins and these numbers if you're thinking about getting off the tools. And of course, if you're only charging £20 an hour, you're going to need even more people to make it possible to get off the tools. Although, we do say now, if you're going to build a team, £20 an hour is going to be really tight. And actually, I think your margins will be a lot lower than 20% if you're only charging 20. But it is a sort of knowing these numbers and understanding these numbers in your business, it helps you make decisions. We often get asked about getting off the tools, and I usually advise you'll need 6 to 7 team members for you to be able to afford to get off the tools. Because this is the reality of the numbers. And I honestly, I'm not that excited by numbers, but I do know they help me make decisions, if that makes sense. And, another question, I think somebody asked in the group earlier about admin staff, you probably need about 15 team members to be able to support an admin team member. So, these numbers are important because they help you make decisions, not just help you do your tax return.
Do you know what's interesting about these numbers though, Diane, which I really like? For anyone in here that's a little bit competitive like me, it allows you to have a direct comparison with other businesses, not in the cleaning industry. And they're like, look, I'm turning over this amount. And then you realize they're running at a 10% profit margin. And you're like, yeah, okay, you're doing double or triple what I am. But actually, you can quite quickly go, that's double to triple the stress levels for actually, we're on the same profit margin. And I know that we're going to be like taking home about the same. So it's quite interesting.
You had that experience, didn't you, in the workshop last week where there was a guy with a building firm turning over £1 million, and you ended up talking about profit, and he was just like, oh, I'd love to make that much. And it's just, turnover is vanity, profit is sanity, as the saying goes. So.
I was saying in one of my businesses, I was like, I make about £20,000, not a mega amount. And he was like, oh, I'd love that. I was like, you just told me you've got £1 million business. And I was like, 20,000 is not a lot if you've got £1 million business. So again, it's the profit margin that matters. Anyway, let me go to the next one for you.
So the next one is financial statements, okay? And I'm just going to cover the main 3 that you should learn and understand. Now, if you're a sole trader, you probably don't worry about a balance sheet. You don't need to necessarily, but I'm going to talk about it because actually it can be an important part of what your business is worth. So it is important. And all these reports, they show how your business is doing financially. Simple as that. They give you crucial information about the business performance, and they help you make informed decisions. And the 3 main statements, I say balance sheet, profit and loss, and the cash flow statement. So let's start with the balance sheet. Because the balance sheet shows what your business owns and owes on a specific date. So if you remember, we talked about assets and liabilities and equity. That's what goes on your balance sheet. And it's, as I said, it's on a specific date rather than over a specific period of time, like, for instance, the profit and loss account. It's literally a snapshot on that day at that point in time. So you've got your assets, things the business owns that have value, liabilities, things the business owes, and then the equity, which is the owner's value in the business. When you've got assets minus the liabilities, you know what the equity is. And it uses this equation of the assets will always equal the liabilities and equity. And this is an important part of accounting. And I was going to cover double entry in this presentation, but it got so complicated, I actually decided not to. But the principle of accounts is everything should match. Okay, everything should balance. If you increase your assets, then either your equity then increases or you decrease your liabilities. So they're always remaining in balance, if that makes sense. So I'll show you a quick example on the next slide. So if you've got assets of £10,000 in the bank, wouldn't that be lovely? And perhaps you've got a £4,000 loan from the bank. So you have £10,000 in assets and you owe £4,000 in liabilities. So if you know that the assets equals liabilities plus the equity, then you're going to have £10,000 in the bank, that's your asset. And that equals the £4,000 liability. So therefore your equity must be £6,000. So that's if you think about your house, if you've got a house with a mortgage, so you might have a house worth £100,000 and you've got an £80,000 mortgage, the £20,000 that's in between those is your equity. So this just works in the same way, but often people understand it when it comes to houses, but not always when it comes to businesses. And as I said, it has to always remain in balance. If you buy more assets or pay off liabilities, the equity adjusts accordingly in order to keep it all in balance.
Sorry, can I ask a quick question with this then, Diane? Your balance sheet, that's what we're on, isn't it? Balance sheet. You said it is a snapshot of any day. You don't have to release this at any point, do you? This is your live working document, so you know where you're up to.
Exactly. So you do have to submit it. If you're a limited company, you have to submit a balance sheet to Companies House and to HMRC on your corporation tax return. So it is kind of submitted because it shows what the business is worth. But yeah, you can literally go on your accounts and at any point say, right, I want to know what the balance sheet is today. So you will literally know what you owe to people, what assets you've got, and therefore what value the business has to you as the owner.
And if you had QuickBooks Zero or any of the others, it would be running this at all points and you could pull it up in a second, couldn't you?
Absolutely, yeah. You literally just go in and say, show me it. Yeah.
And when you say you release it to HMRC and the others, that's just the day at the end of the year day. So 31st of whatever it is, January or March, whatever is your end of year, that's the day where you just have to give them that snapshot.
Yeah. So if your year end is 31st of August, then that's the day that the balance sheet is issued for your accounts. The next slide, which is the profit and loss account. And this is my favorite because I like the profit in the business. That's what we're really looking for, is that number right at the bottom that says net profit or loss. And it's a financial report that shows your business performance over a specific period rather than as a snapshot on a particular day. So it might be a month, it might be a quarter, it might be a year. And I'm going to go through some account software, but most account software will allow you to compare it to previous periods. So you could kind of go, what was this quarter like last year, for instance, and you could compare the two. So it's a really useful reporting tool, and it's probably the one that we're most familiar with because it's also one that you would need at least the numbers from. If you're a sole trader and need to do a self-assessment return, you will need the numbers from a profit and loss account in order to be able to do your return. And it details how much money your business has earned, so the revenue or sales, and how much it's spent, so the expenses, and that the end result is either a profit or a loss. So if revenue is greater than expenses, you've got a profit, and if expenses are greater than revenue, you've got a loss. And it really helps you understand whether your business is actually making money and perhaps how effectively it's being managed, because you can go through your profit and loss account and look at where you're spending your money. And sometimes it's quite telling where you suddenly, what's that big number there? Why am I this happens a lot, I think, particularly with new members of the DCBN that are perhaps using shop bought cleaning products. They might look at their profit and loss account and go, why am I spending £5,000 a year on cleaning products? Whereas I might look at mine and go, well, we probably spend less than 1,000. So, because we keep an eye on our costs. So the profit and loss account can not only just tell you how much you're making, but it also show where you're spending your money and therefore help you make savings and changes to how the business is run.
And is this a review once a month kind of jobby? When should you be looking at this? And when should you be updating it?
Well, I actually think that in order to, it's a bit like, I think it's the same with your personal finances. You can't avoid your finances. And often people do for various reasons, whether because they don't want to see the numbers because they're scared they're going to be bad. But actually, it's your only way to control anything is to know the numbers. So for me, you need to be running a profit and loss account on your business every month and comparing it just to see, are you going in the right direction for starters? And but also, rather than waiting until the end of the year to flag up problems like maybe you're overspending on cleaning products, you're finding out a bit more quickly, if that makes sense. Okay, so then the last one that I'm going to talk about in terms of financial statements is the cash flow statement. Okay, and this is probably the one that is the most neglected, shall we say, by business owners, because it's a financial report and it shows how cash moves in and out of your business over a specific period, such as a month, a quarter, or a year. It doesn't literally mean cash, it just means how money comes in and goes out over a period of time. And it helps you understand where the money's coming from and how it's being spent, but also making sure you've got enough money to cover expenses that are coming in and, you know, liabilities that you have. And like I say, I think it's one of the least used financial statements, but for cleaning businesses, I think it's really important because sometimes our margins can be tight, as we've already discussed, but you know, come payroll day, you need to have projected what you need to have in the bank in order to pay everyone. You don't really want to get to payroll day and then realize that, you know, there's been a problem with the cash in and out of the business. It'll help you decide, you know, you need to get on with your credit control, for instance, or did you actually send your invoices out? So it can highlight a few issues that you, again, might not be as aware of if you're not monitoring it. And the good news is,
this happens a lot more in commercial ones where they maybe have a longer time to pay, 28 days after you sent the invoice. It becomes a lot more painful, this, doesn't it?
Very much so. I mean, most domestic customers are good. They either pay on the day or they pay monthly if you invoice them monthly. But yeah, commercial clients can take 60 to 90 days to pay. And that's when your cash flow starts to really hurt. And bad cash flow will kill your business. You can trade out of business. You can do all the sales you like, but if you don't get the cash in, it's not actual business. So it's really important. The good news is there's actually a template spreadsheet in member documents for a cash flow forecast. So you could just start using that one if that's going to be easier for you, just to sort of start getting into the habit of forecasting and looking at the cash and how it works in the business. And the other thing is these sort of three financial statements, the balance sheet, profit and loss, and cash flow, they're interconnected and they give you a really good comprehensive view of the business's financial health. So for instance, the net profit or the loss from the profit and loss account, that affects the equity section of the balance sheet. Profits increase equity while losses decrease it. And perhaps changes in cash from the cash flow statement, well, they affect the cash account on the balance sheet because positive cash flow increases cash assets while negative cash flow decreases them. So that's why I say that these statements, they do give you a complete picture of your business health. And, you know, as I've said, you need to know the financial state of your business because it will help you make informed decisions, which is what being a business owner is all about. Okay, that's enough of the terms and financial statements. Now I want to have a look. If you go to the next slide, if you haven't already, Louise.
I have already. Sorry, I clicked earlier to the.
No, it's all right because I can't see, so I don't know what you're doing. So accounting systems. Okay, so we're going to talk about a couple of different software options. But when you're choosing an accounting system, and actually nowadays it's a lot harder to do accounting manually because so much of what HMRC want from you now needs to be electronic. So it almost kind of becomes you're going to have an accounting system at some point. But when you're choosing, you need to consider some key features. Okay, so you need to make sure that, of course, did you say something, Louise?
No, just someone.
Oh, sorry. So making sure that it's a really good, easy to use and navigate system is so important. I'm going to mention Sage on the next slide, which we're not going to yet, but that's probably, it's the best accounting software there is. But it's designed for accountants and it's really hard for most small business owners to get to grips with. So make sure whenever you use it. Yeah, it's really hard. Yeah, but Gareth is really good.
He's really good, but he is virtually, like, he has had to literally study accountancy in order to do this.
It's really hard. Yeah, it's very unforgiving. If you make a mistake on Sage, you have to do what you should do. You have to actually amend the mistake publicly on the system. It never goes away. Whereas a couple of the other ones are a little bit more forgiving where you can delete your mistake. So anyway, you need to make sure it's scalable. So you need to make sure that it can grow with your business, and it should integrate as much as possible if you can. And they don't all integrate with each other, and there's sometimes you have to do workarounds, but as much integration as possible is really important, whether it's your CRM or your scheduling or your payment processing. As much integration as possible will definitely make life easier. And also that, of course, will help with the automation. So making sure that invoicing, payroll, and tracking expenses as well. So we're going to talk about expenses soon, but having it all integrated into your accounting system makes life much easier as well. And it should have really good reporting capabilities. Now, I wouldn't imagine there's any accounting software out there that doesn't produce a balance sheet, profit and loss account for you, because again, you need to make sure it does, but I'm pretty sure they all do now.
But some of them have got nice dashboards, haven't they? They've got really pretty dashboards that you can look at and like go, oh, I can see where it's up to, whereas some just produce really good reports.
And I think, sometimes when it comes to this, it's the ease of use. It's what's kind of best for you, what's intuitive for you as to how to use something. And, one piece of software for one person doesn't suit another. And like I said, I've used Sage, I understand Sage, but I hate it. It's too hard. I like, my personal choice is Xero, but I know QuickBooks is really good as well. So anyway, on to the next slide, which is actually the different account software. Now, QuickBooks is known for having a really user-friendly interface. So if you haven't got much accounts experience at all, that could be a good option for you. It's definitely widely used by small businesses. You get invoicing, expense tracking, and you can add payroll. The other thing I will say about QuickBooks is I don't know if you can easily upgrade as your business grows. I remember somebody said to me a little while ago that they were using one version of the self-employed version of QuickBooks, and then they couldn't just upgrade. They had to then create a new version and transfer everything over. I don't know how true that was, but that's the only thing is when we talked about being scalable, make sure that whatever you choose is going to be scalable if you're going to grow your business.
A movement into a limited company, which is its own legal entity, so you probably would have to restart automatically.
I don't think it was, because it was QuickBooks self-employed version, and then they wanted to add payroll.
Okay.
Can't add payroll to the self-employed version. I don't know, but just make sure if you're going to choose QuickBooks, just check that out first, just in case. My personal favorite is Xero. I like it. It's nice and easy to use. It integrates with most things. Doesn't integrate with ZenMaid, which is kind of annoying, but I think they are working on it. But you can do your bank reconciliation in there, and obviously invoicing and payroll really easy. And one of the reasons I like Xero is you can upgrade as your business grows. So you kind of start off with the basic package, and then you move up until you're spending what seems like a fortune, but it's not. It's probably about £40 a month, the most expensive version with payroll. So it's not expensive. And then Sage, it's really robust. It's probably the market leader in accounting software, but unless you're an accountant, I actually probably wouldn't use it. If you've got an accountant and they are using it, then it's probably not so bad for you to actually input data into, but to actually use it as your own accounting system, it's pretty hard to use. And you know what, don't discount a spreadsheet. So I have said that it's a lot more difficult to not use software now, because so much of our reporting has to be in real time and direct to HMRC. But if you're a solo cleaner, actually there's nothing wrong with a spreadsheet that you know everything that you spend and everything you receive, and that can then at the end of the year be your your self-assessment return. It won't give you the financial reporting, but if that's good enough for you, then there's nothing really wrong with it. And there is actually one in member documents as well.
I was going to say I would stick to a spreadsheet until I had to go to one of the others, because I think spreadsheets are way easier. And why complicate your life by having the software until you start taking on staff and you're going to go through software anyway?
I agree. And there's one in member documents for you as well. There's already one set up for you, a simple basic account spreadsheet. So you can just use that if you want to. If you are going to go the software route, this is the next slide, then you'll need to sort of get it all set up. So you'll need to put in your business details, year-end date, etc., to get things started. And certainly QuickBooks and Xero make it really easy for you to get that set up. I also wanted to briefly talk about the chart of accounts, because people don't always know what that means, but it's kind of the backbone of the accounting system, because it gives you the framework for putting all your financial transactions into categories. So whether that's cleaning materials or stationery or printing, whatever it is that you're spending money on, as an example, or even you might be doing different types of sales. You might separate your sales out into commercial sales, for instance, and domestic sales. So however you're using it, you can actually tweak it yourself. So the accounting software sets it up for you with a really basic, chart of accounts. Nothing wrong with that. You can use that, but you do also usually have the option to tweak it by adding some subcategories that make your accounts a bit easier to understand. So as I've already said with mine, I have cleaning materials as a subcategory, and a few other things that are specific to our industry. So uniforms are in there as a subcategory, for instance, in mine. So you can tweak it, but also it's all there set up for you. But it works in main categories, subcategories, and each category and subcategory has a number that you can use. But the important thing about the chart of accounts is it feeds those financial reports. So, your balance sheet and your profit and loss account, it feeds them. So whatever you've got in that chart of accounts, that's what shows up on your profit and loss account and balance sheet. So that's why it's quite good to, if you can tweak it a little bit, because it'll just make it clearer and easier for you to understand.
So Diane, I noticed quite a few people were interested when you gave examples of subcategories there. Is there sort of somewhere where you get templated, or is it in the software already where you get templated subcategories like ideas, or do you have to sort of think this through?
No, you have to do it, but because I'm going to give you a list of all the expenses that I could think of that you can claim for your cleaning business. You could probably use that as your basis and just go in, and it's so easy. You need to make sure you're in the right main category. So if you're going to add a type of sale, you'll need to make sure you're in the main category of sales, and then a subcategory that's called domestic clients, commercial clients. And if your main category is going to be, let me think of one. Well, I'm trying to think of something. So say you wanted, uniforms, then you might have a subcategory under there of commercial, or it might be that you'd have tops, trousers, and bottoms if you wanted, and shoes if you wanted. So you can kind of play around with it and make it work for you.
Thank you.
Also part of getting set up is automations. Okay, so you might have, and we do this a lot with commercial clients as an example, where we invoice them at the beginning of the month because it's the same amount every calendar month, because we've set all ours up on a calendar monthly basis rather than on an hourly, weekly basis. So those invoices can be set up as recurring and ready to go out. You can also set up templates so that you get a nice consistency in your formatting and your branding. So they're not just getting the basic invoice. You can put in your own logo and your own details. You can put your bank details on there to make sure that whatever's going out from the system is coming from you rather than being too generic. You can also add automatic payment reminders in most of the software for your clients. So, if you're regularly reconciling and updating and making sure that the information is correct, then your system can send out those automatic payment reminders to let your clients know they haven't paid. The other really useful thing about most software is on your phone, you can usually capture any receipts. So if you've bought a coffee and you were genuinely at a business meeting, and we will talk about that when we get to expenses, but if you've bought a coffee and for a business meeting and you get your paper receipt, well, you can literally on your phone upload that expense receipt straight into your accounting software. So it's really useful from that point of view. And also most of them, and certainly Xero, uses automated category assigning when you do an expense. So for instance, it kind of learns from you. So if you regularly put in something from a particular, it might be from your bank statement that you're paying a particular supplier this amount every month. So it might be ZenMade, for instance, £140 a month, whatever you're paying, and your software will start to recognize that as a transaction and what category you put it into last time. And then it will automatically do it for you. And all you have to do is click OK. You don't have to keep repeating. You can also set up lots of rules and things, but I'm not going to go into that today, because that's the next level of automating your account software. And of course, if you've got a team, you need to set up the software's payroll function as well. So make sure whatever you're choosing has that payroll function if you need it. And you need to also make sure you then integrate your account software with your bank account. So you can then have the automatic import of your bank account straight into the software, so you know that it's always up to date, and all you then have to do is reconcile it. It all gets much more streamlined, especially as, like I said, it learns from you on the categories. And try and really work on those integrations with as much as you possibly can, whether it's if you've got a CRM or even a sales system, then having that connected to your accounts is really useful as well. Certainly, our ZenMade is, we're able to send out invoices and then they get reconciled in Xero. We had to do a workaround to do it, but it will do things like that for you as well. And
Diane,
also,
Diane
yes.
had a comment.
So just a comment from Nazia to everyone. We have an accountant and don't submit anything apart from bank statements, subcontractor invoices and receipts. That's lovely and basic, isn't it? That's nice.
Yeah, fair enough. I kind of like it to be split out because I like to know where the money is coming in from or going to. So kind of depends what you want. And also another integration is your payment processing. So you've got a couple of options where in the DCBN deals, you've got a free option. Cresco, they can be on your invoices and automatically, when they pay Cresco, it automatically updates your account system. Or Paytrax will do the same thing. That's a paid version where they're paying by card. So, there's lots of ways that you can really make your accounting software work with other things that you're doing. Okay, so then this is everybody's favorite bit, expenses next. And have a bit of a drink before I face the expenses.
Is this vodka?
Yeah, absolutely. Yes. That's what my accountant does, just drinks the vodka before they see my expenses. So, we can all claim various expenses and we can claim them to reduce the tax you have to pay. And, there's a lot that you can get away with, shall we say, in inverted commas, in terms of being a business owner and lots of things that we can claim. But there are some rules, okay? And you have to follow them, otherwise you get yourself into trouble. So there's some criteria around the expenses that you can use in your business, that they have to be deemed necessary for running the business, but they can, if they're deemed necessary, they can be deducted from your profits before you pay tax. But they must, as I said, they must meet certain criteria. They must be incurred solely for business purposes, and they must be directly related to your trade. Now, having said that, you can apportion percentages for personal use and business use, and then you just claim the business portion as an expense, though. So even though the rule says that, that's how you would manage it if you were actually spending money on something for business and personal at the same time. Like, for instance, we'll talk about using your home as an office in a little bit, but you could potentially put through the broadband that you have at home that you use it 60% for business and 40% for personal. So you claim the 60%, if that makes sense. They must be expenses that are incurred while you're conducting your business activities. And I'm going to share my accountant's golden rule when claiming expenses, okay, which you must never break. And that is, don't break the taking the P rule, okay? She basically means don't be silly and make sure you can justify what you are claiming to HMRC. So don't break the taking the P rule, because that will get you into trouble. Okay, so I'm going to share the basic list now. And you'll only need to stay on one slide for this, Louise. It was just for my notes that I moved it onto several slides. But okay, this is a basic list of what you can claim and justify claiming to HMRC, okay? So obviously, if you rent an office or a storage unit, you can claim the rent, but not for your own home, okay? That's covered under own home as office. But in the strict criteria of the rules, you can only claim own home as office if you have a dedicated room for your office, okay? You can't claim own home as office if you work from the dining table that you also eat off when your laptop isn't there. So it is quite strict, but if you do have an office, then you can claim this and you can apportion costs. And usually you do it based on the square footage of the room that is dedicated to the business and then the house, and you apportion the costs. There are some implications around capital gains tax, but I have never, in all my years being in business, ever heard of ever being an issue. But if you remember the don't break my accountant's rule, don't take the P, then just be wary of going too far with this. Decide what is fair and what you are confident you can justify if you're investigated. So as I said, rule of thumb, floor space of the office, decide what percentage is fair for the household bills. But this is only if you've got a dedicated office. There is another method which can be used by sole traders, and you can use the flat rate expense method, which is between £10 and £26 a month, depending on how many hours you work from home a month, okay? So you're going to need to look up the numbers to see how many hours you do work in the home, and perhaps you could potentially claim a little bit. I mean, it's not going to be a huge amount, but you know what? £120 a year is better than nothing, isn't it? And if it comes off your tax bill, all the better. If you're a director of a limited company, then you can use a similar amount. There is isn't a set criteria, but the guidance from most accountants is just use the same method. And again, it's so long as you can justify it if investigated, because it's not as clear cut as the self-employed one, which is set out by HMRC, that those are the amounts you can claim depending on how long you spend on a particular actually working from home. Okay, so then we've got wages and salaries.
Quick question. Am I pushing it if I have an office and claim I'm working from home? I think I am, aren't I?
Yes.
Okay, just checking.
It's one way or the other. Yeah. Remember, don't take the P rule. That's what you have to remember. Okay, so wages, salaries, contractor fees, that's all pretty straightforward. Travel expenses, that could be bus fares, trains, taxis, hotels if you're traveling for work, including any training courses or other events you might attend. When it comes to motor expenses, you've got two choices. You can either apportion business use for all your motor expenses, petrol, servicing, insurance, etc., or the simpler method, which most of us use, is you log your business mileage and claim 45 pence a mile for the first 10,000 miles, and then 25 pence a mile above that. And not a lot of people know about this one, is if you ferry your team about, you can claim another 5 pence a mile as passenger allowance. So any of those days when you're ferrying any of your team, then you can actually be claiming 50 pence a mile. Again, don't break my accountant's rule. Okay, so then we've got the cost of any landlines. So you've got landlines, virtual numbers, mobile phone contract, broadband, all allowable. But if you use your mobile or broadband for personal use as well, you have to apportion a percentage for business use only. You can't claim the whole thing. Of course, printing leaflets, that's all claimable, and cleaning products. Of course, we never use cleaning products in our own homes, do we? All of it is 100% business use. When it comes to cleaning equipment, I tend to put them through as an expense if they're something quite small, even our vacuum cleaners, because they're only £120 and they don't have a long life. So I actually tend to put them through as an expense, because I don't, from my accounts knowledge, they don't become an asset to the business because their lifespan is too short. But if you're spending thousands on equipment, then you're not going to be able to claim them as an expense. You would put them through as an asset, and you then depreciate them as that asset gets older, then their value gets decreased. Insurance, that's easy. Accountants, legal fees, bank charges, advertising, memberships such as the DCBN, that's all tax deductible. Accounts or other software, creation and hosting of a website, they're all allowable. The creation of the website is a slightly grey one, because you could be saying that you're adding value to the business, but usually you just put it through as a cost, as an expense. Computers and printers are an interesting one because they devalue really quickly. So usually you just put them through either as an expense, or you can put them through as an asset, but what you do is you depreciate them by 100% in the first year anyway. So it kind of works out exactly the same. So I tend to just, if I bought a computer, then I would just put it through as an expense, because it's not really becoming an asset to the business, because they're not worth anything after a year anyway, which is why you're allowed to depreciate them completely. However, the correct way to do it is you put them through as an asset and you depreciate them. Then you've got postage, stationery, uniforms, all included. And of course, you can claim for washing cloths and uniforms. And I'd suggest that minimum £5 a load for washing and drying, probably slightly more now, to be fair, but minimum £5 a load. So if you're doing 2 or 3 loads at home for your cloths, washing and drying, then you should be putting that through, because it does all add up and you're allowed to claim it. Then you've got training costs. So these are for you or your team to improve or update your skills. You can't actually put through something that's a completely new thing, though. Now, there's sort of grey areas here. So if you were, for instance, doing the Ultima training and you're currently a domestic cleaner, is anybody going to argue that the Ultima training is a brand new thing, or is it just an extension of you being a great domestic cleaner? You could probably argue that you need biohazard training, so you could probably put that through. But if you decided that your business was going to do something completely different, then you have to be a little bit careful of what you're going to put through in terms of training. And if you've got an office, you can, of course, put through your utility bills. And I'm also going to mention subsistence, because I was asked about this quite recently, where somebody, I think in one of the Facebook groups, was saying that their accountant lets them put their lunch through while they're out and about traveling for work. And I don't know where the accountant, what advice they're giving. I'm not a qualified accountant, so there might be something that I've missed. But my understanding is there's something called subsistence allowance. It's a bit of a grey area, but if you work out and about all day for 5 hours or more, you can potentially claim a flat rate of £5 a day for basic necessities while you're on the road. So you cannot put your lunch through. I'm sorry, but you can't, unless it's a business lunch with a client or a supplier or a team member having a meeting over lunch. That's usually allowable. But your own lunch, just because you're out cleaning all day, it's really not allowable. But if you're out on the road for 5 hours or more, then you could potentially claim £5 a day as subsistence. It is a grey area though. So as I said, my accountant's golden rule, don't take the P, and you should be absolutely fine. Any questions on those expenses?
None have come through yet. So does this mean I can't get paid £25 a week for my lunches?
No.
And by the way, Diane, you'd be lucky to spend £5 a day on lunch. That's a meal deal at best.
I know. But it's not designed to cover your lunch. It's designed to cover the expenses that you wouldn't incur if you were working in one place.
Fine.
Can you give us an example of the subsistence?
Subsistence. So you don't actually need to tell people what tell them what you're spending the money on. It's an allowance. Yeah. So you don't need to keep receipts. You don't need to do anything. You just literally, you log that you were out and about working for 6 hours, say, and therefore you're entitled to the subsistence allowance of £5.
So are you saying, right, just as an example here, that potentially if I was driving around and bought myself lunch, well, I could have taken a packed lunch, so that's fine. You know, I probably can't claim that. But if, for example, I was cleaning, we did contracts with Shell petrol station, I was on site for 8 hours, I needed a coffee break, I could probably claim that coffee because there was no other alternative.
You could, but you don't need to claim the actual coffee. You just claim the £5 subsistence.
Fine. Okay.
And actually, if it was 10 hours or more, you can claim £10. But most of us don't go out cleaning for 10 hours or more.
Sorry, Diane, does that have to be 5 hours straight working or just 5 hours across the day?
5 hours across the day is fine. Yeah. So if you're out and about, even if part of it is driving, then you're still at work. So you're still out working, and it's to do with itinerant workers. And because that's generally what we do, especially if you're out on the tools, out cleaning, then you're an itinerant worker. So you're allowed to claim it. Now, technically, an employee could ask you to give them a subsistence allowance, but it's not a right. You don't have to pay them it. It's just that you could claim it on your tax return.
Oh, hang on. So we could pay them. If we wanted to pay them more, though, they wouldn't be charged any tax on that. That would be just a payment.
Yeah, but they would have to be out on the road for at least 5 hours.
Okay.
Yeah, but the good thing about it is you don't need to keep those receipts for those Costa coffees.
But if you're going to do it for...
If it's for the employee, how would that then be given to them?
It would be given as a tax-free expense. So in the payroll, like for instance, if you pay them their mileage, that goes through, we change hours in our accounts to say mileage, but it's also under the category of a tax-free expense. So they don't get taxed on their mileage, do they? So it'd be the same.
That's like vouchers go in that bit, do they?
Yeah. Yeah.
So
yeah.
I don't know if this relates to expenses, but I've seen in the past on QuickBooks that there is a cost of sales, and I'm sure that falls under expenses. Does that
cost of sales is the direct cost? So if you remember when I talked at the beginning about gross profit, so sales minus your direct cost gives you gross profit. So cost of sales is what it costs you to deliver the sale. Now, if you were making boxes, it would be the cost of the cardboard. But because we're delivering a service, it's usually just wages. You could technically put cleaning products in there, but I don't. I put them in as an expense because it's just too complicated otherwise. And I really only want, it doesn't matter. It's only it doesn't matter from an HMRC point of view where in the profit and loss they are. But the reason that I put wages and contractors, for instance, in the cost of sales is because I want to see what's going on in terms of outlay on cleaners and income from clients. But my salaries, so my admin team, they go in as an expense. They're not a cost of sale because they're an overall business expense rather than a direct cost of each cleaning hour.
Right, okay.
Does that make sense?
Yeah, thank you. Yeah.
All right. Okay, so you've got a list there, and we'll record this, so you'll be able to grab that list, and I could probably even put it in member documents as well, to be fair. So we're going to just quickly touch on tax, and I'm not going to cover it in much detail because that'll be a whole masterclass, and I am definitely not qualified to talk about tax, but I wanted to just give an overview of the basics and sort of the essential aspects of compliance when it comes to deadlines and thresholds, to kind of make sure that, you know, it's all very well having all these accounts, but you need to know what to actually do with them, don't you? So I'm going to cover very briefly self-assessment returns. So these are for those of you that are sole traders, or it might be actually that you're an employee of your a limited company, but you might have other work, in which case you'll be doing a self-assessment return, or you might have property and you're an employee in a limited company, then you still need to do a self-assessment return. So a lot of people, regardless of their states, have to do these returns. And most of us know about the 31st of January deadline, and the accounts that you're delivering on, say, the 31st of January 2025, are based on the previous financial year up to the end, up to the previous April. So 6th of April 23 to 5th of April 24, you're going to submit that by the deadline of the 31st of January 2025. If you've been doing accounts for a little while and your tax year for your business doesn't run April to April, there's something quite complicated happened over the last couple of years, and we're in transition. I'm not going to cover it, but if your business accounting year isn't already April to April, you will have to start transitioning to make it so. So you're going to need to talk to your accountant to help you with a transition, because it'll be quite complicated as to what profits you report in which years, and it's too much for me to talk about. So definitely talk with your accountant. You've got Olive Tree, who are on the DCBN partner supplier. They do accounts, bookkeeping and payroll, and they've got a cleaning business, so they really do understand what you need to do. But if you need help on that transition, then you're going to need to look into that yourself. But what I would also recommend on this is, too many of us, and I've been guilty of this as well at times, is we do our tax return in January and we have to pay our tax in January. Yeah, Louise is laughing because you've done it too. But you know what? If you did your tax return now, you still don't have to pay the money until the end of January. But it means that you'll be prepared, because doing your tax return on the 27th of January and then going, shit, I've got to pay £3,000 is not really very good financial management, and it's not very good for your stress levels. So it's better to know now that you're going to have to pay £3,000 in January, and you can put the money aside.
So what else, Diane? If you happen to have lost your logon details or any of the other essential codes that you need, do not leave it till the 25th of January to suddenly go, no, HMRC takes 2 weeks to issue the codes again, and then you're going to miss your deadline, which some people may have done, right, and found out the hard way. Don't leave it till the last minute.
And the thing is as well, is they won't forgive you if it's, you know, if you've just not got a code, tough, you're going to get a fine. So yeah, so do your tax return now. If you're on self-assessment, do your tax return now, just get it out of the way. One other thing I wanted to mention when it comes to tax is payments on account. Okay? So a lot of people just don't understand payments on account. So, but these are advanced payments towards next year's tax bill. Okay, they're typically made in 2 installments every year. So the first installment is January and the second installment is in July. But the killer is that each of these payments on account is usually 50% of your previous year's tax bill. So if your tax bill is £2,000, you would pay £1,000 on account in January and another £1,000 on the 31st of July. And the first year you do this, it's awful, because on the 31st of January, you're going to have to pay your £2,000 tax bill plus £1,000 for your first payment on account, and then another £1,000 in July. So you're effectively paying £4,000. The only good news is that the following January, the £2,000 you paid on account gets offset. So you only do that double payment once, but it's just worth knowing. And you only do payments on account if your tax bill is at least £1,000. And you can apply to reduce it, but actually you're better off just paying it and having that money in the bank ready for the next one. But it does take people by surprise, this payment on account system. And why do I have to pay double? And it's just like the HMRC just want your money in advance, basically, because they don't trust you. Simple as that.
And it's really hard, especially if you've had rebates and they start messing you around. You can't then, you get into this system and then it's really hard to claim it back, isn't it? Because I had one this year and I'd already overpaid. And I was like, I don't owe it. But you can't appeal it, especially not if you've left it till the last minute. You've got to just pay it.
Yeah. And that's another reason why I think, do your tax return in June. I mean, it's probably a bit ambitious to do it in May, but do it in June, do it by September, because at least you've got some time to plan and to kind of figure out how on earth you're going to pay the bill. Because and also it means that you're not going to be trying to find those codes when you've forgotten your logins. So yeah, good tip there from Louise. Okay, so limited.
Can I just ask, has anyone else done that? Hands up, who's lost their codes? Or am I the only idiot? Just me and Diane. No one else has lost their codes. Good.
Yeah, it happens. So don't do it. Learn from us. That's what we're here to share with you. Learn from our mistakes. Okay, so then we've got limited companies. Okay, so limited companies don't do self-assessment returns. They pay corporation tax on their profits. And this includes profits from, from trading, investments, selling any assets that you sold. And there are deadlines, okay, and they're slightly different for each thing. So you've got to submit your accounts to Companies House 9 months after your year end. You've then got to pay your corporation tax 9 months and 1 day after the year end, but you don't have to then file your corporation tax return to HMRC until 12 months after your year end. But I kind of figure, if you've got it ready for the Companies House at 9 months, you've paid your tax, just submit them all at the same time and just get it out of the way. And again, don't wait until it's the 9-month deadline, because you might have forgotten the code. And also it'll aid your stress levels and reduce your stress levels if you do it early and you can plan and you know exactly what you're going to have to pay. You don't have to do payments on account when you pay corporation tax, which is the only bonus, I think. Okay, so then
Sammy's got a question.
Sammy.
If I'm paying an accountant, do they do all of that for me?
They will. You'll have to pay them, but I would always be keeping an eye on it myself, because ultimately it's your responsibility, and you're the one that will pay the fine.
Right. Yeah.
And there have been people where the accountants have got it wrong, and unfortunately they just wash their hands of it. You're responsible for the fine.
Yeah.
Right. Thank you.
But yeah, your accountant absolutely should submit those for you. They should be able to do your confirmation statements and everything to do with your company, but just make sure that they are. Okay, so then VAT, all I'm going to cover on VAT is about the threshold and deadline, because there's actually a couple of masterclasses already in the training library. So I don't need to go into much detail. They raised the threshold, didn't they? Yay. And so it's 88,000 as of now, June 2024. And if you have already or are likely to go over the threshold in a rolling 12-month period, you have to register. I go into that in quite a lot of detail in the masterclass on VAT that we did. VAT returns are usually submitted quarterly, and the deadline is 1 month and 7 days after the VAT period ends. So if your VAT period is 1st of Jan to 31st of March, your VAT return is due by the 7th of May. Simple as that. Nice. And I can't say VAT is easy, but it's fairly straightforward when it comes to the deadlines. And then finally, the only other thing to mention when it comes to tax is if you've got employees, then obviously PAYE, that is how you collect income tax and national insurance contributions from their wages. And of course, your own employer's national insurance as well gets sent over via PAYE as well. So you're responsible for deducting it and sending the payments, and you're definitely going to need software to do it. I know HMRC do free software, but I have heard horrendous things about it. It's not very user friendly. And for the sake of, I think it's £15 a month to use it through one of your accounts packages, I would definitely use that as an add-on. But of course, it's something an accountant can do. Actually, you're probably better off getting a bookkeeper to do payroll rather than an accountant, because it will be more cost effective to you. But you're going to need to use software because you have to report everything in real time now. So every time you pay your employees, it electronically submits the information. You can't do payroll manually anymore, which is probably a relief for people that used to do that, like me, that had to sit and write everything out by hand every day. But if your payroll's small, you've actually also got the option of submitting quarterly rather than monthly when it comes to payroll. But I actually think monthly is a bit more sensible to help you keep track of the cash flow and keep on top of the payments, because you know, if you're building up a team, it can start to get quite expensive, and all of a sudden you might not have the cash flow for it. So it's usually monthly. You can do quarterly if it's under a £1,500 a month, and it's due by the 22nd of the following month. So May's payroll is due by the 22nd of June. You have to have made the payment over to HMRC, and that's it. That's me finished. Hopefully it's made you a little bit more confident with understanding some accounting terms, financial statements, software, and what you can claim as expenses. And thank you so much for watching.